Good afternoon, traders. How are we doing today? Hopefully everybody is doing well. It's been a moment since I've seen you guys, so hopefully you're having a good week. It is a big week this week in the markets. As you all know, we've got Google today, we've got Microsoft earnings today, and I want to take the first little bit of this time, this office hours session, to kind of go over everything that we've got coming up this week with as it relates to earnings, and then specifically as it relates to Mag 7 names, because Google and Microsoft is just the start, right? We've got Meta, we've got Apple, and what else do we have? I'm spacing on the other one. I should have written it down. We can check, or one of you guys in chat will tell me. My name is Jason. It's a pleasure to be here. This is Office Hours. If you have not ever tuned into an Office Hours session, we do these a couple times a week, or at least we try to. And, we keep a pretty loose schedule with what we discuss in Office Hours. But the real idea here is to kind of give anybody who is interested in TrendSpider, or maybe relatively new to TrendSpider, is to give you guys an opportunity to ask me direct questions. If you got questions about the platform, you can always ask them right here. And I'll demo tools. So if nobody has any questions, that's fine. I'm pretty decent at just kind of rambling on and on and on, speaking out into the void. Good afternoon, Mr. Hedge Fund. Big week, choppy day. It's been tricky out there. It's been really, really tricky out there. You gotta be very careful today. So the first thing I wanted to do, since Google and Microsoft are top of mind, I want to spend a little bit of time speaking to them specifically. They're both at all-time highs. So, what is there indicator-wise that we can point to and say, yeah, this is the place where price maybe will reject or price maybe will find support? It's very difficult when you're at all-time highs, as I'm sure you guys know. Good afternoon, Chris. Hope you're well today. So one thing that I like to do, you guys all know that I like to do this, I like to look at seasonality. Seasonality paints sometimes a very clear picture for us. Sometimes it's a very murky picture. We're not always going to get exactly what we want out of seasonality. It's not always going to tell us something dramatic, but I would say that Google's seasonality actually is pretty interesting. 75% win rate in January, meaning 75% of the time, January closes higher than the close in December, right? That's a pretty darn good win rate. Now we're already up quite a bit on the month, as we can see. And we can kind of, if we wanted to dig into that move, because it's a pretty gnarly move. What, over 10% from open to close, or about 10% from open to close. But what's kind of interesting is that February tends to be the weakest performing month. February and June historically tend to be the weakest performing months. Now this doesn't necessarily mean that we're going to have some deep correction in February. That's not at all what this means. It just means that it doesn't have a very high win rate. That can mean we go sideways relative to wherever we close this month, right? The next piece that I like to kind of look at, and you guys see it if you follow us on Twitter. If you don't follow us on Twitter, what are you waiting for? But if you do follow us on Twitter, you're probably pretty well aware of the fact that you can utilize the strategy tester to kind of gauge earnings run-ups. Lots of folks like to play the move into earnings. Lots of folks like to gauge the move after earnings. And so one thing that I wanted to take a moment to do today was to test and see kind of where we're at per the historical move, per the historical run-up into earnings. So I'm going to pop open the strategy tester here. I'm going to walk you guys through how you do this. So on the entry side, we're going to click add parameter. We're going to say condition. I'm going to choose earnings dates, and I'm going to say within the next X days. And honestly, this value, there isn't like a hard rule about what value to use here. I'm going to go 20 days. This will yield, 2.5 weeks or something like that before earnings, give or take. And then on the exit side, I'm going to do pretty much the same thing, condition, earnings dates, and then I'm going to say within the next day. And the only reason why I'm doing that is because I don't want to include kind of today's action. I want to see the run up to. I just don't want to. I want the trade to get out before the earnings actually happens. So we're going to change this look back period. By default, it's set to 300 candles. That's obviously like not very long. It's like 5 earnings reports. So I'm just going to crank this to the max, 7,000 candles. We're going to run this test and see kind of what the historical reality of the run up for Google is and what we get back. And I'm looking, I'm kind of interested, not necessarily in like the average return. In a lot of cases, I would be interested in the average return, but for right now, I'm looking specifically at average win. And the reason why I'm looking at that is because I want to know, based on what we've done this time, which is a move of almost 7% from our 20 days ago entry criteria. We got a move of almost 7% to the upside when our average move higher for Google is 4.89%. So we are already well above our average move. Does that mean that some of the potential for these earnings are like baked in? That's kind of where my head goes. Like, that doesn't necessarily mean that's true, but that's kind of where my head goes. Like, if the run up was maybe 1% or 1.5%, and normally your average win is closer to 5, like it is, well, that would tell me like it's not really doing what it tends to do when you have this really strong move, or when you have a positive move higher, run up into earnings. So I don't know, something to think about. We're already pretty well ahead. Today's implied move per the internet right before I went live was 4.7%. So 4.7% puts us approximately 160 to the upside, 144, 145 to the downside. These implied levels here, this is not, I want to be clear, I drew these beforehand. These are not automatically identified by the platform, so just want to be upfront and honest about that. So kind of interesting. We are Google very strong historically in January. February is its weakest month. February and June are its weakest months. We're already relatively well ahead of where we normally are percentage gain wise when we have a positive run up into earnings. And we're at the end of the month. I don't know. What does that mean? I have some thoughts about what it could mean. Now, I'm going to be honest. I'm not going to trade this. I don't trade earnings, and I don't know if anybody has opinions or if anybody out there, or anybody tuned in is trading earnings. I'm curious to know what you guys think, where your head's at. What are your expectations? I can add in a couple other things here, like we could check unusual options and see if there's anything in unusual options that's looking kind of interesting. I mean, it's very, very clear. All of the most up-to-date stuff. This is the 250, I believe. The most recent 250 unusual options orders. Those are anything over $25,000. And it's very, very clear that they are call biased. Right, this thing is a giant wash of green, so that tells me that at the very least, unusual options are definitely slanted toward calls. Doesn't necessarily mean it's all call buying. It could be some call selling in there too, so got to keep that in mind. But very slanted towards calls. We could take a look at, I don't know, what are insiders doing? Are insiders doing anything here? We got a couple of sells. We had a big sell on the 17th. I'm not sure who this Sundar fella is. Perhaps he's a very important person. I don't know all the insiders. $3.2 million sell ain't nothing. A couple of days ago. Looks like he sold earlier in the month. Same deal. He could be on a schedule. I don't know, but definitely no buying in here. So that's something worth noting. No buying. And we could also do this too. Like, it might be worth, instead of looking at Google, we could look at GOOG. Few more, a bit more historical stuff there, historical data, but really kind of the same look. Your average win, when you win, is 4.7%. Things gain about 6.9%. It's the same issue, really strong January's followed by weaker February's. And I will also note this too. We're looking back. I've got this preset to 10 years of historical data. So, you know, we could go back farther in time if we wanted to, at least for some names. We go back farther in time. I like to just kind of see the past decade. Kind of feel like everything before that might be almost too much information. We could bring this up too. You know, we maybe make it like since 2020. Since 2020, Februaries have a 25% win rate. So the past couple of years, Februaries have been pretty bad for Google. So something to keep at the back of your mind if you are trading this thing, if you are thinking about taking a position into earnings. Now, let's talk about the same idea, but let's use Microsoft. Now, first up, seasonality, 80% win rate since 2020. Let me push this back to 2014 here, just so that we can kind of have a bit more data. So clearly January, not the strongest month of the year historically over the past decade. That belongs to July and November, but we do see a little bit of weakness coming in February. Microsoft tends to be a bit stronger than Google tends to be in February. We can add a mean change here and just kind of see mean change is 0.08%, pretty marginal. That same strategy test, you know, when I switch tickers, that strategy test is going to run on whatever ticker I have up on my chart. So it just ran on Microsoft here. Average win when it wins on that run up into earnings is 4.05%. This run up is at 6.15. So very similar to Google here. Microsoft 2% above the average win percentage when you have a run up into earnings. So that's kind of interesting to note too. You're seeing the same kind of scenario on both names. You've got a 4.25% implied move on Microsoft here. Again, I drew these lines manually. The platform is not identifying this. 4.25% to the upside brings us to 425.77. 4.25% to the downside from the current price brings us to 391.61. Whether or not they'll stay within that implied move area, I don't know. We'll see. But that is kind of how everything is lining up. That's what the expectation is. So let's take a quick look at unusual options. A little not quite as similar here on Microsoft. Definitely seems to lean more towards calls. They're definitely more slanted towards near term. I feel like there's a bit more of an even distribution across looking out in time. You can see down here the x-axis, I think this is the horizontal axis, is time, right? So as you go out in time, you're going to have less and less unusual options orders. We're looking at like serious leaps here. This is January 2026. So that's kind of the gist on Microsoft and Google, at least that I was kind of looking at. Again, it's so difficult to gauge all-time highs. The only thing that I really think to utilize is fibs when it comes to all-time highs. If you measure a fib from the all-time high, from the previous all-time high back in 2021 down to the 2022 lows, we are right at that 1.5 fib extension here on Microsoft. I want to say that Google is nowhere close because I think Google so Google is like just this week made a new all-time high. So there's not really like I don't know, it's not really a good fib to draw that I really see. So it's gonna be very interesting. Curious what y'all's thoughts are. What's up, Chewy? Powell rug pull, you think so? Why do you expect a Powell rug pull? Well, actually, I don't even know when the next time he's speaking is. I'm going to check on that really quick. Do you know? Mr. Hedge Fund, you imagine if ER moves are flat, you remember that's what happened with NVIDIA. Option sellers won. Is that what happened with NVIDIA? I believe you. I just want to see. This guy right here. Yeah, I guess so. And where were we relative to the previous highs at 505? Oh yeah, we were still well ahead of him. As you can see here, let's kind of see what the story is. I guess NVIDIA is probably going to be entering into this like earnings run-up period very shortly. Average return, average win percentage when it happens, 7.65. Last earnings run up. So yeah, so the last earnings run up was a 16% move. If your average win during a run up is 7.65, that's double your average return. Not a huge surprise to see a little bit of a sell-off here. Interesting. All right, so let's switch gears a little bit. Let's talk about Apple. Just kind of going to do the same relative analysis because, I don't know, it makes sense. So Apple, historically, pretty lousy January. And then you have this increase. You have this strengthening into the spring. That's kind of interesting because Apple, for all intents and purposes, at least from what I can tell, Apple's been a dog lately, right? Like Apple's kind of been struggling, hasn't been able to really make a new high in quite a few weeks. It has not been following the same track as its peers. So perhaps maybe Apple is kind of setting up for something kind of interesting. I mean, I don't know. Where are we at here? Let's see. So we're currently 3.21% on that move. Of course, we do have earnings coming up here, so it hasn't exited this trade idea yet. Your average win rate, or your average win percentage on a big moving earnings run up is 4.17, so it's not quite there yet. It's kind of lagging that earnings run up average relative to Google and Microsoft, right? That's kind of interesting. If we look at unusual options, there's not as much activity on Apple, that's for sure. There's not as much conviction sizing either. You can see the size of the circle represents the size of the order. And you saw on Google, on Microsoft, there were lots of larger circles overlaid on top of each other. And on Apple, the unusual options positioning is not as strong. Now, it is still 2 days from earnings, right? So perhaps we're going to see something different in 2 days. We'll have to come back in 2 days and take a look at it. But right now, the sizing isn't quite all there. This is pretty interesting. 150 calls for June of this year. 10.42% of the total open interest, $6.7 million in premium. It's a pretty conviction trade. Definitely trumps by a factor of a lot the sizing of all of the trades around it, right? Like the next biggest thing you have is this $2 million trade here on the 215 calls for December 2025 expiry. So I don't know, how much credence do we give this? And this isn't as interesting as this is. I'll definitely say that. So perhaps, I mean, with Apple coming into some strength, whereas you've got Google and you've got Microsoft coming into what is historical, a little bit weaker of a time. It's kind of an interesting reality. Let's pop over to Meta. Take a look at Meta. Meta hit the $1 trillion market cap club once again. Last week? Let's take a look at seasonality on Meta. Similar to Google and similar to Microsoft, right? A stronger January followed by a historically kind of weaker February, weakest month of the year, tied with September. We could change the let's change the look back period a little bit. That's even worse, right? 25% win rate in February is over the past 4 years for Meta. So that's not really the greatest look. If we look at the average win, 5.34%, we've not technically closed out of this position yet. But let's just see kind of where we're at right now. Now we're at 9%. 9% from our entry. So like, whoa, almost double our average win. So I don't know. Are you guys what are you guys thinking just based off of what we're seeing here? Where are y'all's heads at? So far, kind of seems like Apple's certainly the laggard. If you're bullish on Apple, it's kind of interesting because it hasn't made a overextended move really into earnings the way that its counterparts have. They've all so far, Meta, Google, and Microsoft have all kind of grossly or not grossly, but like at least by 50% gone past what they tend to do on an earnings run up. So that's interesting. And all three of those names tend to have weak Februaries. Yeah, Chris, I mean, I'm with you. I completely feel the exact same way. I'm not going to play these earnings. I never play earnings personally, but you know, I know that there's a lot of folks out there that are holding some 0 DTEs or some Friday expiries, some lotto tickets. I know it. So, you know, trying to get you guys on the right foot here. Now, I want to look at the Qs just real quick because I want to see how the Qs kind of do. Yeah, this is what I was kind of worried about. February, same deal on the Qs too. September, clearly the weakest month of the year over the past decade, but February not so great either. Let's go back all the way and kind of see. Even when we look all the way back, to as far back as we can look, 1999, weakest month of the year is the Qs. Or rather, is February for the Qs. Yeah, I don't know. It's kind of sketchy, yeah? That's kind of sketchy. And then what's the last one? Oh my gosh, why can I not think of what the last one is? Holy moly. I am having a serious mental block here. Let's do this. Oh. This is the one. Right, Amazon. Amazon is this week, right? Yeah. Amazon on Thursday as well. So let's kind of run through the process here with Amazon and kind of see what's up. So I'm going to first look at seasonality 10 years back. So Amazon, weaker a little bit in February, but certainly not its weakest month over the past decade. Let's look back just these past couple of years. All right, past 4 years, not so great for February. Let's check all of its historical data. Second weakest month of the year, second worst performance of the year, February. And actually the lowest mean change historically happens in February. Mean change in February, negative 2.68. That's kind of interesting for Amazon. Let's check the earnings stuff. 48 position, 60% win rate. Average win, when you win, 5.48% higher. Where are we at right now? My whole idea here is just kind of like a weight of the evidence approach. We're at 3.787. So not quite there. We do still have a couple of days for this to flesh out a little bit more, but certainly Amazon, certainly Apple lagging in the historical run-up arena, and Microsoft, Google, and Meta definitely overperforming, outperforming. Check unusual options here. Quite a few big orders coming up for this week. 2.8 mil in premium on the 167 calls. It's notable at the very least. Got some insider selling. Old Adam Slipsky. He's the only one. And he hasn't really been selling that much. You know, 75 grand at a piece. Or in chunks of 75 grand. So just kind of slowly selling. Interesting. I mean, Amazon is essentially the only one that is not at all-time highs. So we could do perhaps a little bit of analysis here. I want to also, though, I want to look at earnings moves post, too. Post run-up. Or post earnings. Let's check this weekly. So the big weekly item for all my price action traders out there, you do have this very clear fair value gap that we have essentially cleared out this week. You got a little hangman candle forming here. It's only Tuesday, so there's still time. Let's see also, I'm going to try some fibs and just kind of see where we're at in fib land. I think we're 786, right? Yeah, pretty darn close on the 7HX retrace. Now, generally speaking, let me do something real quick. Generally speaking, if you're able to get up and over, up and through that 50% retrace, the 618, if you're able to get through this, I generally anticipate a continuation back up to the top of the range. If it were gonna reject, I would almost expect it more so to reject in here. Whether or not it will ultimately get back to the top of that range, I'm not saying, this is not financial advice, I'm not saying that it's going to. But once you've, like Sarah, you guys know Sarah Sabatino, Sarah the Stratter. She's got that 50% rule where she says, you know, if price is able to get more than 50% past that previous swing, which would be from the previous high down to the low, if it's able to get past that, you kind of have to start expecting that it's going to go ahead and get all the way back to the top. It held the lows down here. But you do have, certainly, you do have a ton of volume up here. You have to assume it. Yeah, so when we measure, so this is a volume by price, but this is the drawing tool, right? When we measure volume by price of just this section, of course, this is exactly what you would think it would look like. Your point of control, your VWAP, all up here at the top of the range where all of this happened. Let's take this, though, and extend it maybe to the lows. Well, now we're including all of this price action, the swing all the way back to the lows. Your point of control is still right here. Where are we getting caught? You're getting caught right at the point of control. It's where the most volume is at price. Let's include everything. Still there. So all of the volume that occurred from the 2021 highs until now, essentially, was not enough volume to equal or to be greater than, like there wasn't a price level that had more volume at it between the COVID lows and right now than 159.96. That is kind of crazy to think about, considering this thing is traded as low as $80. You had way more buyers up here at 169 than you had at 80, and then you had at 100 or at 120 even. I mean, you could see the volume distribution is peanuts relative to what we got over here. It's huge. So this is a very logical place where you would anticipate price to have trouble. And that's exactly what it's doing. It's struggling because you have a ton of people who are stuck 160. And guess what? They're back to break even and they have become sellers. So something to keep in mind. I don't know. What do you guys think? Where are your heads at? Let's get some conversation going here. I've been speaking into the void for what, half an hour now? We're 20. Well, actually, shoot. It's closing time. Let me do this. We are here to watch earnings. Let me put them on. So I'm just adding after hours data here. Looks like Google struggle busing. Microsoft moving a little higher. Oh, and Daily Stock was talking AMD. Microsoft, bang. A tale of two scenarios. Look at this. So clearly, oh, I love the back and forth. I'm gonna do something really quickly. You got them both ready. Just long SOSX and SOXL. That way, worst case scenario, you got one winner. All right, so the initial move higher is now being faded on Microsoft, and Google's initial move lower is now being faded and is bouncing. What a fake out. This is why I don't touch earnings. Gary. You tripping, Gary. All right. Let me just do this real quick. This is not the greatest look for Google or Microsoft here. Let me see what I can't find. Thing is, we still don't have information yet. Do we? I'm gonna pop back here. Yeah, still nothing. Nothing popping up. I'm just looking at news to see. Microsoft beat. Ah, there we go. 293 beats estimate of 276. Sales 62 billion. Beat estimate 61.12 billion. So a double beat for Microsoft and it sells off. GOOG beat 2. Google beat 2. 164 beats 159. Estimate sales of 86.31 billion. Beats 85.33 billion. So beat on sales by 6 cents. No, 5 cents. Or beat on EPS by 5 cents. Beat on sales by $1 billion and change. What's up, why not? How we doing? And they are both selling off. Google beat on cloud revs too, huh? That's a little, I'm gonna be I'm gonna be very honest here. It's outside of my pay grade. I really don't follow fundamentals too much. And I think part of the reason why I don't trade earnings is for that reason. And obviously, you know, it's so hard to trade these because double beats and they both sell off. But like we talked about at the top of the show, these things, they had run quite a bit more than they tend to run. So maybe all of this was kind of priced in and they're just kind of giving back a little bit. If we go, now check this out. Here's your 4.7% implied move on Google. We are there. Microsoft, not quite there on the implied move yet. That's interesting, though. It'd be interesting to see if they actually hold this on Google. Seems like a logical place. If that's the implied move, seems like a logical place. Your entire podcast is trading earnings. You are insane. All right, so we've kind of, I mean, what happens from here is going to be perhaps largely dependent now on the earnings calls. We all know that the initial move is one thing, then you have the earnings call, and that's a totally different story. I'm not going to be live for the earnings call, so I want to open up the floor. If you guys have any questions, I'm going to hang out for another maybe 25-ish minutes. If anybody has any questions about TrendSpider, if you are tuned in and you are a TrendSpider trader, maybe you're new to the platform. If you're new to the platform, I would love to field any questions that you have. Joe, you didn't take it. You had a gut feeling and you didn't take it. It's hard. I don't blame you for not taking it. I know some of you, I recognize everybody here. Oh, Larry, what's a good recommendation for a day to swing trading scans? Wow, Larry, that's such a big question. Can we kind of talk a little bit maybe about like what you would normally be looking for? Day trading is a completely different world than swing trading. So it would be very difficult for me to find or to pinpoint an idea that would be like, yeah, you should do this for both. You should utilize this. But if you have certain things that you look for already, perhaps we can put together an idea for you. So I'd be happy to do that. I always personally kind of shy away a little bit from like making suggestions about setups because, I don't know your personality. I don't know what you're trying to trade. But if you tell me a bit about yourself and what you're trying to do and what you're trying to look for, then we can talk. Now we do have, let me see something real quick. Haverell. Oh, dope. Haverell, if you don't have that indicator, here, let me get it for you. Give me 1 second. Just gonna go grab it real quick. I should probably, kind of dumb, I should put that in the video description, shouldn't I? So the reason why you don't have that indicator is because it is a custom indicator that you have to download. So let me give you the link to it. And I apologize for that confusion, Harvell. Here you go. There's a link to the full time frame continuity custom indicator. If you're not familiar with full time frame continuity, I would encourage you to dig into the concept. It is a pretty cool concept. It has been popularized by our friends in the strat trading community. But the thing is you don't need to be a strat trader to utilize it. In fact, it's my belief that anybody who trades ever should really utilize this. Let me give it to you. So for those of you who have not seen this video, strongly recommend take 5.5 minutes and watch this video about full time frame continuity. Full time frame continuity is when multiple time frames are moving in the same direction. The most common time frames that traders utilize for full time frame continuity are the 30-minute, the 1 hour, the 4 hour, and the daily. So the idea is if the 30-minute, the 1 hour, the 4 hour, and the daily are all up, meaning they're all green, then you have that power and that strength of that up move on your side. And you want to be trading in the direction of full time frame continuity. If you have full time frame continuity to the downside, then you don't really want to be taking long bias trades because they tend not to work in that environment, and vice versa. You want to be fading pops when you've got full time frame continuity to the downside. You want to be taking longs on pullbacks if you got full time frame continuity to the upside, right? You want to be trading in the direction of full time frame continuity. And you can take full time frame continuity and break it down in lots of different ways. So let me show you very quickly. So the way that the indicator is built using the 30, the hourly, the 4 hour, and the daily by default. When those 4 time frames are green, the candles are painted green as well. If those 4 time frames, if it's a mix, 2 of them are green, 2 of them are red, 3 of them are green, 1 of them is red, 1 of them is green, 3 of them are red, then you're going to get a gray candle. Full time frame continuity doesn't exist. If all of your time frames are down, are red candles, then the candles are painted red. So this is a very quick and easy visual representation of the underlying trend. If you have trouble identifying what the trend of the market is at any given time, full time frame continuity is another very interesting way of doing that. You don't have to necessarily use moving averages. You know, some people, if the moving average is down and price is below it, you're very clearly in a downtrend, right? But then there are also times when the moving average is sideways, and you're going to see it in this indicator too, right? If you're gray, then maybe your moving average is kind of channeling in between price. If they're green, then maybe your moving average is below price and moving up. If they're red, maybe your moving average is above price and it's moving down. Now you can edit these criteria to some degree. The daily is hard coded. The colors are just based on the direction of the move. So if they're red, then you're gonna be, if all 4 of those time frames are red, then the candle's going to be red. If all 4 of those time frames are green, then the candle's going to be green. If all 4 of those time frames, if it's a mix, then the candle's going to be gray. So the big thing you want to be watching for is the candle red or green? Because if it's gray, then it's kind of a mixed signal, right? Now the daily is hard coded. You can adjust these 3 time frames to anything you want below the daily. I think the only place where new users to it, full time frame continuity has nothing to do with moving averages. I'm just saying moving averages are another way to determine the direction of the trend. But you can use it in tandem, for sure. The indicator is really kind of designed with the day trader in mind. And when I say that, what I mean is it's only visible on the lowest time frame that you have defined and below. So right now I have the 30, the 60, the 4 hour, and the daily defined. I'm on the 30-minute time frame and I can see this indicator. If I were to jump up to the hourly, notice how the indicator, you can't see it anymore. However, if I were to drop to anything below the 30, the 15, the 5, the 1, whatever, I'm going to be able to see it. So if you want to see it on some higher time frames, then what you want to do is you want to increase the lowest time frame. So let's make this like 60. Let's make this, I don't know, 120. And say apply. So now, since my lowest time frame is the 60, now I can see it on the 60-minute time frame. Hopefully that makes sense. There is another step of this that you can take, though. On TrendSpider, we have a tool called the Smart Checklist. It's right here. Inside the Smart Checklist, think of the Smart Checklist as like a scanner for your chart. Not a scanner that looks for charts, but a scanner for your chart. And so what I'm going to do is, inside the Smart Checklist, I'm going to go to where it says Choose Script. And in here, in my script list, I'm going to type in FTFC. Now I have these pre-built for myself. You would have to make your own. We could talk through how to do it if you want. And I've got this one, FTFC small time frame, FTFC all time frames. So this is looking for time frame continuity on the 5, 15, 1 hour, 4 hour, daily, weekly, monthly, quarterly. This is every time frame I care about, right? I say choose this script, and it loads into the smart checklist those conditions in real time. So in real time, what I know about Google is that the quarterly is green, the monthly is green, the weekly is green, but all those lower time frames are not. The daily, the 4 hour, the hour, the 15, the 5. Anything that's not true is going to have a red block next to it. Anything that is true is going to have a green block next to it. This big bar on the far outside represents whether or not all of these things are true. And since only 3 of my 8 conditions are true, then this big block being red just means that all of my conditions are not being met. So if you require higher time frames, something higher than the daily, because this indicator only will show you from the daily lower. If you require the weekly, the monthly, the quarterly, you can always create a script, import that script or input that script into your smart checklist, and you can have a good visual representation of full time frame continuity right now here in your smart checklist. And for those of you who are not familiar at all with this, there's a lot more that I could add here, right? I could add indicator conditions. I could add candlestick pattern conditions. I can add anything that I can put in a script, I can add in here. And I could give different sets of conditions, different criteria. For example, let's do it. I'm just doing maybe this one. Yeah, here we go. So this is an example of a very complex script. It's got a bunch of full time frame continuity conditions up here. It's got earnings report date within X, dividend X date within X, news since X days, any analyst ranked as any rating. On the candle side, either an inside bar, an outside bar, a hammer. On the moving average, I've got moving average conditions here. So I'm just kind of showing you this, like you can get very, very thorough, right? You can get very, very thorough with what you define in this smart checklist. So if you're the type of trader, let's say, that has 5 indicators on their chart, you got a couple of moving averages, you got an RSI, you got a MACD, and when you go to take a trade, you want all of these particular things to be true. You want all of the moving averages to be in order from shortest to longest. You want price to be above all of them. You want RSI to be above X. You want MACD to be above the signal line, but you don't want it to be crossing down. You want it to be increasing. Anything that you can think of that you look for on your chart, you can define in your smart checklist. And instead of, as you're scanning through names, the names that you trade, I'm going to grab a watch list here. As you're scanning through names, instead of like zooming into the chart and going, oh yeah, it's above this, it's below that, those moving averages aren't in line, instead of doing all that, just define it in your smart checklist, and your smart checklist will do the scanning for you. It will tell you what is true and what is not. And if you require all of those things to be true, just look for a big bar here. Is it green? Is it red? If you require all those things to be true and this bar is red, then they are not all true, and you could just keep on moving on. Imagine the speed and the time that takes out of your analysis. This allows you to just filter, just instant filter and go, yeah, that doesn't meet the criteria, 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 right? You can very quickly make those assessments as opposed to zooming into every chart and going, yes, no, maybe, I don't know. You can utilize as many time frames as you want to in here. You can see I've got a 5, a 15, a 30, an hour, a daily, a weekly, a monthly. So there are no limitations there. You can really, really get really precise with this. This is like a very, very fancy indicator, all like that does everything for you. It's pretty awesome, frankly. So I'd recommend utilizing it. Full time frame continuity combined with go no go is an interesting thought. Obviously, you cannot see them both at the same time. But what you could do, if you wanted, is you could load up a secondary chart. And on one side, I'm going to turn off my FTFC. And this is chats. So chats is kind of very similar to go no go. Same idea, paints candles based off of a handful of different momentum readings. And so, yeah, you could totally do something like this. And also what you could do, you can't do it with Go No Go because Go No Go is not scannable. The one reason why anybody who mentions Go No Go to me, I always say, hey, check out chats. And the reason why I say check out chats is because in quite a few cases, not every case, not all the time, but I'm just going to put up Go No Go here. I'm going to turn it off on this side. So you can kind of take a look at what Go No Go is doing and what chats is doing. And it's my belief that you'll probably see some kind of similarities here, right? The week trend readings on chats are going to be these purple, red colors. Obviously in Go No Go, the week trend readings are these purple to amber colors. As the trend strengthens, it turns blue. When in the strongest trends on chats, it's this bright green color. Again, it's not exact. It's not one for one because they're using different underlying indicators. But since you can scan for chats, you could pop into your scanner and you can utilize chats to kind of whittle down potential Go No Go things, right? Because Go No Go, because we can't scan for it, chats is just a value. So if I were to come in here and I said indicator, let's just say daily chats. I'm going to use the index option, and I'm just going to say that it's greater than a constant value of X. So I'll show you this. So the chats has a lower indicator as well. Let me, I'm just going to make this a single chart so we can kind of see it better. Come on. There we go. That's what I was trying to do. All right, so chats is an oscillator that goes from 100 to negative 100. 0 is your middle line. Anything above 0 is considered more bulls are in control. Anything below 0 line would be more bear territory. Anything above 70, or rather 75, yeah, above 70 is the strongest trend. So from 70 to 100, you're in the strongest uptrend. And in these strongest trends, the indicator actually pins to 100. So different than the way you think about like a RSI or something like that, where once it gets into really hot RSI territory, sometimes that would be like an overbought reading. Well, when chats gets into this 100, oftentimes it will pin to 100. So like you want to be, that's strength. That is sheer strength. So anything in this like green area, 70 to 100, is going to be the strongest trend. And then same is true for the negative 70 to negative 100. And so if you thought of chats as a way to kind of guesstimate Go No Go, then you would probably be saying like 0 is kind of like the go fish area of Go No Go, right? And maybe if you're 0 to 50, you're in that like light blue. And then or not light blue, I guess it's like aqua. And then above 50 or maybe even above 70, you're in the blue on Go No Go, right? Maybe you could think of it like that. And since you can define these things, you could say that chats is 70 on the daily, or chats is greater than 70, or maybe you want to say chats is greater than 90 or something. And then maybe you can go and you can define some of those time frame continuity conditions using price. You could say price daily close greater than price daily open, right? So that's giving you a green candle on the daily, and maybe I want to duplicate this. I want to say the weekly is green as well. So I'm just going to switch the time frames here. So now I got the weekly is green. Maybe I want to say the monthly is green. So I'll say that. So now I'm defining full time frame continuity. Maybe I want to add one other time frame here. Let me do that real quick so that we have 4. And we'll use the, 2 hour. The scanner in TrendSpider can utilize 4 time frames at once. So this is my limitation here. I've got the daily, the weekly, the monthly, the 2 hour. So we've got a really strong trend on chats, which would be kind of suggestive of a like a really bullish reading on go no go. And then you've got full time frame continuity, right? And then you can just search for the names that are meeting that criteria right now. I'll just look in the NAS 100 and here's everything meeting it. And what I would venture to guess, what I venture to guess is that we're going to get a bunch of names that are in blue on the daily. So there's your blue. This one's not quite blue. So it's kind of interesting. Like I said, it's not 1 for 1. It's not perfect. Here you go. Here's a really good example of something that's not that. It's got that really strong chats reading, but it's not quite. Oh, sorry, you guys. I was looking at the hourly. I'm an idiot. I apologize. Always make sure that your chart time frames are lined up with like the time frame of the thing that you're looking for. So I'm looking for, particularly, I was looking for like blue for go no go, and for the most part, we're getting mostly blues. It's not all blues. This one isn't blue, but for the most part, it is. What's the significance of chat's threshold? I believe, let's see something here. So threshold is the, watch, if I make this like 90. You know, just like with RSI, the oversold or like the top and bottom lines on an RSI are preset to, I believe, 70. Chats is the same. If you were to increase that threshold, see how it made the green area way smaller and it made the purple area way smaller? That's all it does. I would leave it preset how it is. This is how Tushar is the developer of this indicator. This is how he uses it. This is how he expressed it should be used. So I wouldn't really mess with the threshold personally. You certainly can if you have tighter conditions that you want to monitor, but I would probably leave it at 70. But all that number does is change the visual component. It doesn't change anything about how the indicator is reading. So yeah, I would play around, Haverel, I would play around with this idea of incorporating chats just to kind of supplement your thoughts on go no go. Kind of where my head would be at on it. But again, always remember, it's not 1 for 1, like I said. So hopefully that helps. We are here at an hour. Does anybody have any last minute questions? Are you guys curious about anything else? Anything else I can help with? Otherwise, I do have some other things I gotta do, so I would like to prepare if I can. And if no other questions, no big deal. We're going to be back at it doing this again. More comprehensive go-no-go indicators coming. Yes, there are. So in short order, we are going to be opening a TrendSpider marketplace. And I can kind of, I can show you. Actually have them. So we've got a couple of new indicators that are going to become available. Now, I'm not exactly sure what the plan is for how they're going to release these, if they're going to be free or if they're going to be paid. I'm honestly not certain. But there's the oscillator, the squeeze, and the Trend Pro. The squeeze and the Trend Pro are similar. The Trend Pro contains the squeeze, but the squeeze is not in the... I don't know exactly, or I'm sorry, the oscillator and the squeeze look similar. The oscillator does not contain the squeeze component. And then the Trend Pro is going to automatically mark when the go and the no-go switch, but it's also going to give you signals for where you need to be re-adding in the direction of the trend or shorting against So, what's up, Slaylock? How's it going? Good to see you. It's been a minute. So yeah, they're coming. Haberel, I just don't know exactly when they're going to be. I would suspect, well, I'm not going to give a time because I don't know. But we are pretty, like, we're all prepped and ready to share all of this. I've made a bunch of supplemental material for it, or me and the guys at GoNoGo have put together some supplemental material for you guys so that you can learn how the indicators work and everything. And it's just a matter of the storefront, which I have to assume is coming very soon. So one thing, who asked? Someone asked. Larry Johnson, are you still here? Recommendation for day to swing trading scans. Of course I remember. It has been a minute. Or you just haven't said hello. Either or. It's good to see you. Thanks for being here. But you're kind of, if you just got here, man, you kind of got here a little late because I'm about to get out of here. But I'm going to be back Thursday afternoon, same time, same place. 3:30 p.m. Eastern time. We're going to be watching Apple. We're going to be watching Amazon. And we're going to be watching Meta. Larry. Okay, so Larry, talk to me. What do you have things that you're looking for to begin with? You don't even have to necessarily like know the indicators that you would use, but like give me an example. Like you could even give me an example of a chart. Like, is there a setup that you can point me to, a particular time frame, a particular ticker? Is there anything that you could point me to and say, I like to trade when this happens? Because if you can point me in that direction, we could build something real quick, I would think. And I'd love for you to walk away from this with something. But I hate to like make suggestions about what I think is cool, because I trade in a relatively unique way, and I know it's unique, and so it's hard for me to always suggest it, even though I enjoy trading this way. VWAP above. You mean VWAP is above price? Is that what you mean? Let's talk about this. Hold on. I'm just going to do this for a moment. Let's add VWAP here, because I want to visually see where your head's at. What time frame are you trading? Let's talk through that. Because if you just wanted to find that VWAP is above price, you would say indicator, whatever time frame, let's say 5 minute. VWAP is greater than price, 5 minute close. What's up, bros? Hope you're well today. The other thing that you can do here, so we got VWAP is greater than the close. But you can also click on these 3 dots and you can add a buy at least X. So you can add a percentage margin, right? So maybe you want to, maybe you're looking for longs below VWAP. Is that perhaps what you're after? You're looking for like price is extended from VWAP or something. So maybe you want to look for scenarios where price has gotten really far away from the VWAP. And looking for like oversold conditions. I don't know. Let me run a scan real quick and just kind of see what this yields. So the only thing that we get in this particular instance is dash. Oh, oops. I need to go to the 5-minute. So VWAP below price, but then what else? Want to get you there, Larry. Also, I want to try and get it to the point where you kind of can think through this stuff and then script it on your own. That's even more important. If you're just simply looking, though, for VWAP below price, this is how you do it. VWAP greater than price close. Or you could do it the opposite, right? Above and trending up. Cool. So let's do this. You could just simply say price 5-minute close greater than indicator VWAP. We'll say 5-minute VWAP. Now, for trending up, the simplest and most basic way that I can kind of define up is I have to define the VWAP relative to itself, right? So here's price above VWAP. When I run this scan, doesn't mean that the VWAP is going to be increasing, does it? It just means that the price is above it. So if I want to specifically define that the VWAP is increasing as well, then I need to define, or I need to define the VWAP relative to itself. So we'll say condition, we'll say indicator, we'll say 5-minute VWAP is greater than indicator 5-minute VWAP. To the right of each of these conditions, you're going to see this little last button. And this last option allows us to define the candle that we are referring to. And by default, it's set to 0, which is the current candle. Now, if I want to say that the VWAP has been increasing for a while, well, then I could do it kind of in a couple of different ways. I can leave this as 0, and I could come over here and I could say maybe like 20. So the VWAP currently is greater than it was 20 candles ago. So it's a loose increase. Now we can rerun this scan and we'll see what we get. Notice how sometimes it's flat and sometimes it's increasing. It's not always increasing. Generally speaking, it's increasing, but in this particular case, like it's flat, price isn't really doing much here. It's kind of consolidating around. Maybe this is exactly what you're looking for. You're looking for price kind of trying to build a base just above the VWAP. Maybe this is all you need. I don't know. But if you're looking for something more like this, then you may want to stagger the candles a little bit differently, define where the VWAP is greater than itself a little bit differently. So here, I said that the VWAP currently is greater than the VWAP just 5 candles ago. And I can click on this button right here and duplicate these conditions. And then I could come in and change them. And I can like say 5 candles ago is greater than 10 candles ago. And maybe 10 candles ago is greater than 15 candles ago. Maybe 15 candles ago is greater than 20, right? So it's a little bit more defined. Now we get a whole new set of things, and they're gonna look more like that steady up trend. Like we're likely not gonna get much that's flat. Still, we do get a little bit of stuff that's flat, but nice, Chris. See, this is what I'm talking about. This is why we tune in to office hours, because all of this is applicable on any moving average, right? Because that's all VWAP really is. It's just a moving average. So yes, now you're thinking. I like where your head's at, Chris. Now you could also take this more steps farther, right? You could say, like, instead of saying price is greater than VWAP, you could change this and say price is within range of VWAP by X%. Right? So maybe you're looking specifically for price being really close to the VWAP, but the VWAP is increasing. So here's your 0.25%. Price is within 0.25% of the VWAP, and the VWAP is increasing. Going to get a totally different set of names when you do that. Right? And now maybe this isn't quite what we're after either. Maybe we want to specifically define the amount that VWAP is greater than itself. So we could come in and we could add another condition, and I'll do this very quickly. I'll say greater than indicator 5-minute VWAP. And in this particular case, I'm going to keep this as the current candle. I'm going to change this to 20 candles ago, and I'm going to say it's greater than the VWAP 20 candles ago by 2%. I don't know. That way I have now not just defined that it's increasing, I've defined how much it has increased over that period of time. And clearly none of them increased by 2%. None of those names that we were getting kicked back. We're gonna go to 1, nothing. Let's go to 0.5%. And the whole idea here, nothing. Interesting. What is going on? This can't be right. What am I doing wrong here? Interesting. Did we break it? No. So they literally just are not that, there just aren't really many out there that are like, that have really extended. So what I'm getting at, the point that I'm trying to make here is like, the more specific you can be with the idea that you have, the better. Think through your idea one little step at a time, you know, like, okay, you want price above the VWAP. That's the first thing that we defined. We've changed it since then, but that was the first thing we defined. Get your results back, see what exists, and then take a look at the charts that you really like and start kind of breaking them down a little bit. You got a scan you're currently using. It works really good, but just looking for ideas to increase its results. So you want to increase results? You want more results? Because that's kind of an interesting thought too. Like when I think about scanning, I think about getting as few results as possible. Because the whole purpose of scanning is to find actionable stuff. And if you get 100 names, how are you deeming any of them actionable? Maybe it's a little counterintuitive to think this way, but this is just kind of how I think about it. Like whenever I'm creating scan, I want to get that thing as close to the setup that I like as possible so that the stuff that comes back actually is something I can play around with and actually consider taking a trade on, like in that moment. If I was looking for setups that were kind of like leading up to a trade, then I might try something a little bit different. Let me see. Forex, I believe, is not possible. But let me see. Scanner was on. Hold on. For some reason, I feel like it's not, but maybe it is. I'm just gonna do something. Oh, no. Yeah, Forex integration. Not possible. I should have read this one sentence more. Some symbols were skipped because Scanner does not support Forex and indices. You scan, but then you have to pull up each chart and look at the direction of the 50-day and the 200-day. Why not add that in there? Yeah, add that in there, man. Chris, if you're walking away having learned something, I've done my job. That's great. I'm so glad. Larry. Yep, that's it. And then adding price above or below is another level of that, right? Larry, I'm going to give you this, man. Larry, this is my Twitter handle. Next time you see a chart that you like, really like, a setup you really like, send it over to me. And we could build out a scan with it. It always helps to be able to like see a setup that a trader really likes. Like just being able to see it on a chart I find it much easier to translate that idea into a scan if I can kind of see what it is exactly that you're looking for. Awesome, Chris. You could define them relative to one another too, right? 50 greater than 200. You could define how much by how much. 50 greater than 200 by, or 50 greater than 200, or 50 within range of 200. You could say like, you could do things like this even if you wanted to. You could like make this any of the following, or make a condition group that's defined as any of the following. And you could be like, you know, a recent cross or something, I'm just gonna very quickly SMA crossed up on indicator SMA, right? If I say, excuse me, actually, I don't even need to do this. I always forget that I don't need to do this. So I could say any of the following, or actually don't even need to do any of the following. I could just say happen within, right? You can have a condition group that defines a thing, and you can say that there was a cross within the past X candles. So yeah, you can get very, very specific with the scanner and how you define things. The real big limitation with the scanner is the 4 time frames, which isn't even a big limitation. I mean, 4 time frames is a lot of information, but the way that you can like break into different condition groups and define different condition groups in different ways. So, but yeah, Larry, if you see a chart in the next couple of days that's just like cherry perfect, this is the setup, I love this setup, take a snapshot of that chart and DM me, or just tag me on Twitter and show me what it looks like so that I can kind of see it, and then we could build something. But hopefully what we've done here today, just kind of talking through a couple of the different ways that you can utilize and define things, hopefully that's given you a little bit of a, you know, the next step. Full time frame continuity built into the strat indicator already. It's not, it's separate. It's separate. It's linked above. Why not? Let me give you this though. I'll just link it again. There you go. It is a custom indicator that has to be loaded into your account manually. So you just click this link. I'll show you what it looks like. You're going to get something that looks like this. Click login and import, and it's going to essentially like log you back into your account. And then in the top right corner of your account, right in here, you're going to see you just subscribed to this new indicator. And click on that. It's going to load the indicator in your custom indicator editor in here. It's going to load this in. It's going to appear on your chart. And then when you turn off your custom indicator editor, it's going to go away. It's the only thing that's kind of confusing. It's going to go away. You're not going to see it. But then when you go into your indicators list and you type in FTFC, it'll be there. And you can click and add it and say apply, and then it'll be on your chart for good. So that's how it works. Hopefully that's helpful. Larry, I look forward to seeing the Larry Johnson setup. When I was growing up, my next door neighbor was one of my best friends. His name was Matt Johnson, and his dad's name was Larry Johnson. So I know you're not my friend's dad, but it's good to see you. Thanks for being here. I'm going to get out of here. It's been a pleasure hanging out with you guys today. Alert notifications of a new scanner symbol that meets the scanner criteria without having to run the scan again. So, great question, Haverel. We are beta testing something like this. It is not the, it is not alerts directly into the platform, although I really hope, and I would imagine that's coming. But we are beta testing scanners that automatically run and email you those results. So right now, the scanners are not designed or built to automatically scan on their own. You got to think about like the reality of that, which is people would have these things set up every minute, and it would be a huge burden on servers. And that's really the, it's really why it doesn't exist yet. But we are beta testing auto scanning, like setting a scanner to a time frame and saying every time I want you to scan this, I want you to scan for these conditions every single day at this time, and then send me an email of everything meeting that criteria right now. That is being beta tested by the team. It's not live on the platform yet, but I believe we're beta testing it because it will be on the platform soon. So that would be the first step of that. And hopefully the functionality will only increase and get better as the time goes on. So, okay, for real though, I'm gonna get out of here. If you enjoyed this session, do me a favor, like this video and subscribe to our channel. Turn on your notifications so that you know that I'm live. That would mean a lot to me. I really enjoy doing these, and I think that you guys find these helpful. If you find these helpful, you can let me know by subscribing to the channel, by liking the video. If you really want to go above and beyond, like really above and beyond, hit the contact us button. Send a little message and say, I love office hours. Please don't stop doing them. I'm going to keep showing up for them because they're really helpful for me. You guys doing that lets my team know that these are worth doing and allows me to keep doing them. And I want to keep doing them, but you guys got to let them know that you like it. So with that, y'all, I'm going to get out of here. Again, thank you so much for being here. If you traded, let's take a real quick look. I kind of want to see, yeah, Google, Microsoft. Oh, Microsoft bounced all the way back, but struggling now. Google never even gave the mercy bounce, just death. That's the key. Why not? That's what we're here for. Got to get you guys learning things every single time. So, all right. So thank you for being here. Again, I will be live once again this week, Thursday, 3:30 p.m. Eastern time. We're going to be watching, what are we watching? We're watching Meta, we're watching Amazon, and we're watching Apple. So you guys, if you missed the first little part of the show, rewatch it because there's some good information in there about all of those names that you missed if you missed the first half of the show. I hope you guys have a great rest of your day. It's been a pleasure hanging out with you, and I look forward to seeing some of you, all of you, more of you on Thursday afternoon. All right, take care, guys. We'll see you next time.